Hello and welcome to the Friday market update. So I'm waiting for the Fed to cut rates, said every hesitant buyer lately. Well, guess what? Mortgage rates already beat the Fed to the punch. According to Mortgage News Daily, top tier conventional loans are hovering around 6.25%, and FHA, VA loans are now below 6%. That's not a typo. I've locked loans in below 6% this week. Why? Because mortgage rates are market driven. They move in anticipation of what the Fed might do, not what they've already done. So take August 22nd, for example. Fed Chair Jerome Powell and his core group in Jackson Hole boondoggle hinted that a rate cut is finally on the table. The day before he made that speech, mortgage rates were sitting at 6.62%, according to Mortgage News Daily. Since that date, they've dropped down 0.33% to where we're at today, somewhere around 6.25. So Wall Street has already reacted. So if your clients are waiting for the Fed to make the rate cut, they're already too late. Next week, the Fed meets again on Wednesday, September 17th, and they're expected to officially cut the Fed funds rate by 0.25%. The benchmark rate that influences all different types of interest rates across the economy, from credit cards to auto loans to savings accounts, all that stuff. So, but here's the catch. If the Fed surprises the market and doesn't cut, expect mortgage rates to go up a little bit. If they cut more than expected, like a 50% or a 0.5% cut, mortgage rates could actually drop a little bit. My take, based on the recent jobs reports and the inflation numbers that came out this week, I think we will see a 0.25% cut, and then the Fed will just wait for more data before acting again. Now, the refinance opportunity, is there one going on right now? Don't let your clients miss it again. If your buyers closed in 2023, 2024, and even into 2025, there could be an opportunity for them to lower their interest rate. This week alone, I helped 8 families save between $200 and $600 per month on their mortgage payments by lowering their interest rate. So we've seen this before. About a year ago, rates briefly dropped, not long. It was like 2-3 days down below the level that we're at right now. But many waited. They wanted to wait. They thought rates were going to go down further. We sometimes miss that window, and now they had to sit another year before they could get that rate lower. And now they're jumping back in and saying, I got to get my rate lower. This is great time. So don't miss out. Get them out there and at least evaluate it. So my refinance rules of thumb, because not every refinance makes sense. Here's what I would advise. So the ideal scenario is having the closing costs, whatever they are, limited or a lot, pay back within a year. That's a really good situation. Still worth considering if the payback is less than 2 years. That's generally considered a good investment if you can pay back the cost within 2 years. Be cautious if it's over 2 years, 3 years, 4 years. And I've seen that from unscrupulous lenders that say, oh, your payment will drop this much, but they don't realize that they're packing in all these closing costs onto the loan, making it look super attractive. And the payback period is years. And especially because I believe rates are going to drop again in 2026. And the bottom line is most consumers don't know how to evaluate a refinance properly. And big call centers, man, they're built to sell. They're not serving the client. They have many reps that don't even own a home themselves. And they're paid, honestly, to keep the client on the phone longer, to try and build trust, to make it work in their advantage, and they're not always selling them a smart loan. So why am I different, right? Well, I've been in the business 32 plus years. I was a commercial real estate appraiser for 7 years prior to that. I personally bought and sold 29 homes, and I can absolutely spot a bad loan from a mile away. And I'll always give your clients the honest truth. You can trust me. You should trust me. Explain the real cost, break down the numbers clearly, and help your clients avoid unnecessary refinancing. It may not be worth it. And I tell them that it's not worth it. Wait, or it is worth it. Let's do it and let's go. So just shoot me a group text with your client, whether they're buying a home or considering a refinance, and I'll take it from there. So my final thoughts, I get asked a lot, what do you think rates are going to do? I still believe long-term, we're going to land somewhere in the mid to low 5% range by the end of 2026. I think we're going to see them gradually decline. I hope they gradually decline. I don't want to see them bump down, up, and just kind of disrupt the real estate market like we have. So, but it won't be a straight line. Rates are going to bounce around, and hesitation could cost your clients real money. So let's help them act smart, not wait for perfect. Don't ever wait for perfect. If it makes sense now, have them do it. So we'll see you next week. Hope you have a great weekend. We'll talk to you soon. Gaylord out.